Super Thursday, it's a dud. That tech rally, well, that ends with a thud. And the Bulls rotation, well, that may be stuck in the mud. All that as we start the show.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market spent most of the week in a tight range, really moving sideways. Still saw some buying coming into the NASDAQ stocks and a revival of the second and third tier as the Russell stocks began to move up. Everybody was waiting for Super Thursday, where the ECB announcement was coming and ex-FBI head Comey was going to testify, and the UK election was coming. And there was some anticipation that that all could bring some fireworks. It really was not a Super Thursday as it was. Comey actually released his testimony in written form on Wednesday, which kind of brought no real climax to that at all, no excitement at all when you saw that. As a matter of fact, both sides think that they had something to win about. Those on the left believe that there was obstruction. Those on the right believe that the president was vindicated. There's some other people that may get caught in the dust of that, and we're going to see how that all shakes out. European, the ECB policy, they're still on hold at -0.4 on their deposit rate, indicating that that policy was not going to get any easier and that there's more of a focus on tightening than anything, even though the inflation rates are still very low. They do see growth picking up, so that was not any kind of a big deal either. The UK election actually didn't move markets so much, except for the pound falling, and the overall the stock markets didn't move much at all. As a matter of fact, on Friday after the news, the stock market tried to rally. It turns out that the ploy that Prime Minister May tried was she wanted to strengthen her grip on Parliament, and it weakened quite a bit. She no longer has a majority in there, so it's like gridlock that we used to have all the time here in this country. She's going to try to have a minority government, and it's likely to be a struggle. And for the people in the UK, it was pretty much a shocker. As far as the stock market goes here, S&P 500 was up, was sideways, up a little bit, and now down a little bit as I do this show late in the day. The NASDAQ took a giant hit, now down over 2% on the week with a massive reversal. I'm going to show you some things on that, the charts on the FANG stocks in just a couple of minutes. The Russell, which has been the big laggard, had a big pop up to being up almost 2% on the week, but now has given most of that up. Bond market, 30-year bond down almost a point on the week. We think that's going to turn around on the upside too. The dollar, a small up week, and we think the dollar has a ton of risk. Might make a little more move on the upside, but we don't think that there's a lot there. The British pound got hammered after the election. That dragged the euro currency down also, and we think that both of them are going to make some significant lows coming up in 1 or 2 weeks, and that there will be recovery in the British pound, but I think the euro currency's got a lot more potential on the upside. Gold and silver, we expected a down down week in there and got it, but we think overall gold is in a very, very good shape and likely to be moving up again pretty soon. Silver is a little bit weaker. Gold down some $8 or $9 on the week as I speak. The silver market down about 30 cents, a little bit less. Now it's had a little bit of recovery since I last looked. Oil market down again significantly, like $1.50 on the Qatar news. Well, you say, what's the big deal about that, right? Well, with 4 countries ending diplomatic relations and some blockades of trade and that kind of thing, it's overall turmoil in the Middle East. And the sense is that OPEC could really come apart in here, and there's a massive oil glut, and a lot of oil being produced here in the U.S., and Iran picking up its exports also. So there's a lot of oil and a lot of risk, and a good sense that oil, which we thought was going to go back under 44, is going to do that. So the stock market, well, there's been a lot of complacency, and we've seen the VIX, as the VIX has moved down to 937 today, 9.37, and then the stock market came apart and the VIX exploded over 12. So there's been a lot of volatility in volatility as far as that goes. We think the VIX is going to go a lot higher in coming weeks because we think a top is in place. So the market makes new highs here for the week, and of course driven by the tech stocks. But that seemed to be that the techs were stalling, and we did a video on Thursday of this week that you're going to want to see about the stock market rotation and the groups that the buyers were moving into as the techs were stalling. We thought it was kind of a tell for the fact that the market was also stalling, but not exactly sure how much buying could come in those laggards that were now picking their heads up in there. But the real focus I think that we need to look at is what happened here to the FANG stocks, the tech stocks in here, as there's been some pretty big reversals in there. FANG stocks and some of the other leaders have really come apart in here. Let's take a look as we switch over and look at some daily charts in here of these tech stocks, and you'll be able to see what happened and why I think that there's a pretty good top in place. It's a little later in time than I thought it was going to come, but I think it's come, and these are some very bad charts that we're looking at here. We're looking at daily charts. Take a look here at the Facebook chart. You can see that highlighted area and that word engulfing. It's actually a double top also. As I grab my pointer here, and you could see these are cyclical patterns right in here. So this is the ideal pattern, which we use cycle brackets, and it points at the significant lows. You could see that right in here, a modest correction, a modest correction. These are all bullish patterns. This one a little bit stronger on the downside, and look at right here today. It makes a double top off of that high, and then this giant engulfing pattern as it engulfs this last 2 weeks of trade. That is massive, and what we really expect that it's going to do is come down and test this support zone that you can see right over here, which it just traded down into today, maybe a couple days, try to rally, and then moving down again. So Facebook, there's a look at one of the market leaders that now looks to me like it's going to be a market laggard, and looks like it's overbought and a top in there. Take a look at Apple. We're going to look at the same things, these daily charts in here. Now this one here, we had talked about with our subscribers that it had this bear flag we thought that was forming in here, and look at this as it breaks down under the flag with this giant downside day. We think the momentum is going to carry this one down for another week and a half, and it could have a lot more risk in there. Take a look at AMZN, the darling that moved sharply over 1,000. And now this big down day, that has to be a bad tick in here today. This thing didn't trade down all the way to 926, did it? I don't think so, unless there was some panic I didn't see. But there's the big engulfing. This one looks like it has until the 3rd week of June also on the downside, just in this wave. This is actually a cyclical short-term breakdown in there also. So big bad pattern when you look at Amazon. So that's 3 of the FANG stocks, FAA and N. Netflix, this is one that that I got short a little bit in advance of this break. Look at this engulfing pattern here. We told our subscribers that if it breaks under this cyclical low right there, that it was a big warning, and there it is breaking down, hits the short-term support zone, but we think it's got a lot more on the downside in there in the FANG stocks. And take a look here as we look at the last one, the G stock, which is G-O-O-G-L, Google, or Alphabet, and look at that engulfing pattern right in here. This one looks to me like it's got a lot more to go. Reasonable targets down here are 940 and 916 based on this support zone that we see in here, and we think that that has got a lot left to go on the downside. So here at the end of the week, it looks to us like this bond bubble has popped. And this is just the first day, day one on the downside of what could be a long time. You know, the rotation may work. In other words, they may start buying some of these other depressed stocks and be able to give the market a lift on the upside again, and challenge the highs after this big reversal day in the stock market. However, we believe that the tech bubble is popped, and that what we can hear right now essentially is the hiss, just in case the bubble hasn't popped, but it has sprung a leak. So that is a look at the tech stocks, and you can see why we believe that there has been something in here that has changed. Let's take a look at what's happened in the stock market in the past week as we look at our 60-minute chart. There you can see that right there, and if you can see that Friday, that big movement that happened on Friday as the market turned to the very, very weak side. We're going to take a look here, though, as we look during the week. This was interesting. We got this sideways movement here as everybody was waiting for the market for the news on Thursday, but we had that London Bridge, that horrible terror attack again, the third one in the UK in under 3 months. But the stock market really overall held up pretty well. It had those high waves. That's those long tails that you see in there, and that was kind of a tip-off that there was some selling at that level, and you see the selling came at that level again, and it got just a little bit higher there at the end of the week. This is where the Cutter news also came out. Apple gets a downgrade from an analyst, and there was a little bit of selling that started to come in there. Oil got soft. But the U.S. stocks, they tried to pop and kind of held up all day long. On Tuesday, the market did get sold in here. There was some angst about Comey, and Bitcoin pops over 2,900, gets close to 3,000 on that day. Cryptocurrencies have a market cap of over 100 billion. Incredible, and I've been saying that has some meaning in here, and especially for the gold market. U.S. stocks tried to rally, but then they got soft in here. On Wednesday, the world was waiting, of course, for the news coming out on Thursday, and Comey pulled the fast one on everybody. And then he came out and released his testimony right here. It didn't look very damaging, so the market rallied back after being down, and the people are looking at that stuff. Fed Kochler came out, another sick statement by one of them, and said they should not hike at all. In fact, they should grow the balance sheet. BS. Oil plunges over 4% still as fear grows over Qatar, and the stock market reverses up, as you can see in there. On Thursday, everybody was holding their breath about the UK election. ECB, they held, and that, markets kind of didn't do much here, but then they rallied again But sellers come in. Now, if you look at here, sellers came in here and here and here and here, and a monstrous amount of selling came in here on tech reversals. The UK news came out and May loses control of the government. Didn't seem to make that big a deal. And the pound had a big drop. Gold was down as the dollar got a little strength. But the techs had this massive reversal, and the stock market sold off in a giant way. We had the NASDAQ down over 2.5%, close to 3% at one point. And it's not much better than that right now, as the market is in its last few minutes here of the day and seems to be meeting some weakness as you look at that. So here's our calendar for the coming week, and as you can see, there are no earnings reports of the 320 stocks that we follow closely. The big event is going to be on Wednesday, where our little arrow points to the FOMC meeting. 2 o'clock will be the announcement. 2:30 Eastern Time will be the Fed chair, Janet Yellen, her press conference. She'll repeat that statement, and then she will then take questions and try to justify this slow increase in interest rates that we see potentially happening in here. And I actually think that they're going to go up in June, and then they're going to have a lot of trouble picking up interest rates again. That's in alignment with what I think is a positive outlook for the next couple of months in the bond market. So yields coming down. I could see 2% yields or lower on the 10-year in just the near term. All right, so that is our short-term look here as we have our opening of the stock market, and we're going to give you a surprise short-term look towards the end of the show as we do something a little bit different. So you're going to want to see that if you normally watch our short-term view. We're going to mix it up a little bit, and we'll be right back with our best and worst stocks for the week. All right, for our best stocks of the week, we do this every single week where we take a look at all of our 320 stocks, and we take a peek at what were the biggest movers, and we pick out the ones that had some pretty good patterns and I think some information that has caused the moves to come, some of the background information. And some of these are what we think are setups for some pretty good patterns. We're going to look at some of the worst of the week that have some we think toppy patterns on them that I think are pretty good. So take a look here as we look at the best stock of the week, AMD, Advanced Micro Devices. There has been very strong product demand based on graphics cards that are used for, well, Bitcoin mining. The digital currency miners, well, they need it. They need the graphics card, and that's what's got this thing moving up pretty good. 21% up for the week at best level, though it's had a big reversal in here, so it's not up anywhere near that amount right now. As a matter of fact, it's given up a tremendous amount of that upside gain, now only up about 12% on the week. So that got caught up in the tech stock debacle that essentially happened here on Friday. and you can see in here that it's left that big tail. But it's got a nice pattern in here, and I wouldn't be surprised to see it try to get some more on the upside in there. Let's take a look at the second best stock for the week, and that is Alibaba. And just like a lot of other stocks, this one has given up a lot of gains. Note the perfect touch of the 100% fib extension. That's pretty amazing when you see that, as you see that well, just like nails it right there and then pulls off. It was up 18% on the week at best level. It's now only up 12% on the week. So a lot of these stocks that were in this category have given a lot up. We could see this thing, you know, giving a little more attempt back up to excuse me, to that level, but then likely again rolling over. This is really a significant one in here, NVDA. I wanted to show this one because it's like in that, you know, market leader tech category with a massive reversal in there. Pops above the 100% fib extension. Let's take a closer look right there. Likely to get some support in 133 to 140 area, but that's been a bad reversal. Let's take a look here, and you can see right here, look at that massive reversal. I'm just going to grab that and extend it down. It's a huge engulfing pattern. So again, those supports right over here down near 130, 140 to 131. So we think it's going to get into that support zone, but it's gotten all the way near that last little low in there, and that's a bad occurrence. To us, the stock is finished, and likely if it picks its head up again, it's going to move back to the downside. You can see our pattern in here suggests declining out into September, and now this big shooting star on the weekly says, well, that's over with. One that we don't normally look at, Navistar. Take a look at this one. This ends up to be the stock that has the biggest gains on the week, 14%, as it moves up to this 78.6% level. Earnings came out at a loss, but they came out and said there's no sign of weakness in truck demand. So that stock explodes to the upside. We think this is a big resistance for it, and it's not going to do much better in there. So Navistar looks to us like it would be not one that we would chase at these levels as it moves up into resistance. Next stock we're going to look at is Tesla. Now, Tesla has been having a massive move to the upside. Tesla, the stock of the future, right? I mean, a technology stock that makes cars and also makes solar cells and storage cells for solar energy, and builds solar roofs that look absolutely incredible. Problem is that they're heavily subsidized, and none of those things really make money. And the roof, of course, takes 30 years or so to get you payback on. So the question is, when the government money runs out on their cars, which is going to happen in the middle of the Model 3 near-term production, a couple years out, it starts to fade down. Then the competition is just huge, and a lot of other companies are catching up. And we think that this Tesla bubble has just popped. Also, with the rest of the group, it got up to some important resistance levels in there on Tesla. And take a look here, as you can see, it gets up right, nails that fib extension confluence right over there. We'll take a closer look right there, and then just take a look at the earnings projections, and these are average. For 17 they're expected to lose $5.80, and for 18 still to lose $1, and that's with government subsidies. So you got to say, they're really held up on fantasy. And the stock gets up to an extraordinary 376 and then rolls over. We have this as a top that I think is important, and I have a feeling that what you're going to see is something like a pattern that looks like this. comes down right into this period here. That's these nested cycles right there. Gets another rally, so it's down to like 320, then gets another rally in here, and then these other ones grab a hold, and you get another bigger move down in here, your ABC pattern in there on the downside. So I think it's finished in there. Take a look at the daily pattern, and you can see in here this massive engulfing pattern right in here. Some minor support comes in this area of around 342 down to about 335, and I think in the near term out into late June that's about the level we're going to see it. Massive engulfing pattern, just as we showed in the earlier part of the show, and that's not pretty at all when you see that. So that is a look at Tesla, and we have more to look at. The retail group, we'll call it a mixed group this week, as some stocks got some bargain hunting in them and then failed off the bargain hunting. Nordstrom moves up a strong 9% on the week. Tesla, by the way, was up at 1.12% on the week, and that ended up is ending up now only about 4% on the week. And now when we switch over here to, it's amazing how many stocks gave up a lot of ground in here. JWN, which had moved up pretty significantly, up 11.7% on the week right now, actually is at about its best levels, near the best levels of the week, as they come out and say that they're interested in going private. And to us, that is a pretty much of a tell that, you know, if when it gets dips, you can buy it. And right in here, we can see that this is one low and this is a second low, and they line up right in here. You can see that, the minor and the major. And then it turns up. So we think if you get any kind of a pullback in here, that it's likely not to be able to stay on the downside. Core's down. Core's up about 8% on the week. We think it's a sell. A UAA up about 8% or 7% on the week. That's an improved pattern in UAA, and we think that that one you can probably stay out of the way of being on the short side in Under Armour UAA, even though the pattern in there is overall in the longer term not great. Let's take a look here at U.S. Steel. U.S. Steel had a good gain on the week. Also, it was up about 9%. Now it's up about 8%. So you can see it in this big decline. It didn't give up much ground. We talked about this one this week in our market rotation video. And closer look here, and you could see it's now entered into this green zone right there. If you wonder what this blue dotted line right here is, that is the DBB. That's the base metals, and this one tends to follow it quite a bit. Now they've gotten a little bit out of phase, but you can see here the U.S. Steel pattern called for a bottom here and then a rally, and that's almost nailed that timing right there as it moves up. All this talk about infrastructure again, and I think that you can look for further advances here in U.S. Steel. Up 8% on the week, and overall not a bad pattern. Also in this discussion of stocks that are rebounding based on market rotation, and the NASDAQ tech stocks having given it up and they're looking for places to put that money, the banks entered into an upward rotation. We did a member video back about a week and a half ago where we talked about the anticipation of that happening, and sure enough it did. We're going to look at a number of the banks in here really quickly, and you'll be able to see these patterns that, well, pretty much great when you look at them. Citigroup moves to a new high and has one of the best cyclical patterns of the whole group, as this stock in here is up about 6% on the week. You can see that as it now is approaching the fib target zone. You could see that right up there, and a bullish pattern. What makes it a bullish pattern? Well, it continues to be a stair-step upward move in here that you can see as it follows these cycle rhythms and then up again. First or second week on the upside, it's not likely to top. You're probably going to see more on the upside in there. Morgan Stanley, you can see in here, as that one enters, we have colored phasing in here, so it enters the rising phase. It's kind of in a place where it could get stuck up here near the 45 area when you look at that. Take a look, and by the way, that's up 5% on the week. BAC just turning up. You can see that right over here, as that one is up about 5% for the week. Or also, JP Morgan, similar pattern. Goldman Sachs, similar pattern, up 4 or 5% on the week, as they have some pretty good gains. Along with the U.S. Steel gain, you might be looking at some of the other materials, Cliff, CLF, FCX. Those got some pretty good gains also, like 7 to 9% on the week. And I think they're fakes. So be careful there, because I don't think the material stocks have all that much upside to go. I much prefer U.S. Steel. So that's a look at the best stocks for the week. And now we'll take a look at the worst. All right, for the worst stocks of the week, the worst stock of all when I started to do this was in the energy WLL, but we've had some jockeying around as we've had this big reversal today, but the tech stocks still having early gains in the week don't show up as far as the worst stocks of the week. They only show up as the worst patterns of the week, which is really interesting. So I've already showed you a lot of those, and I think that those are important tops. So I just want to go back and make that statement because we've already looked at those, and I don't want you to think that they're not included in the worst of the week, because they're late comers based on when I wrote this show, and those are very important tops. The stock that moved down the most for the week is, along with this oil break, is Whiting Petroleum, as it moves down pretty sharply. We showed the stock for a couple weeks. It had this cycle warning breakdown that you can see right in here. It had that bottom that came exactly where it was supposed to, but then rolled over. We don't see a low in here till October, so if you get a pop in oil and you're long this stock, man, I would use that as an opportunity to exit. No news in this at all, just oil being on the downside. So I told you about Nordstrom and Coors and UAA getting some good bounces on the week, but the retail stocks overall, a lot of them had some pretty big declines on the week on some really ugly patterns. Let's take a look, as we still have Whiting in there, but I'm going to switch over to Urban, URBN. This is in the teen retail category, and has our colored phasing in there also. So when this one broke under this level right here, right there, that's where this cycle low is right at that point. You can see that right there. Then it gives a warning that all of the time left to that cycle will be in a decline. That's why it became a red zone. Look at that last month as it just comes apart. Urban down about 10% on the week as their same store sales drop off. Abercrombie, pretty similar situation. ANF as this stock moves lower also. There was some rumors out that they were willing to accept a 13.5 bid for the stock to take it out, and well, that's nowhere. So the stock basically got some selling coming in on that also. That's down about 7% on the week. Macy's, another one. Look at this one, is that broke down and then has continued down. We have a low here and come around beginning of September before we think this is over with. You can see the resistance zone. It tried to pop into there the last couple of weeks and then just could not. So Macy's down about 4% on the week, as that had a little bit of a recovery from its worst levels. Dollar Tree, DLTR. You can see this one in here as this one rolls over. This one down about 6% on the week. We have this in a declining mode towards late in July. So that is a really bad looking pattern in there. And they warned that their margins were going to get worse. And take a look here as we look at one more in here, and that is DKS. As we think that this decline, you can see, goes until the middle period of August right there. And that is really ugly looking when you see that. So, you know, these retailers hammered by Amazon, which is now looking like it's topped also. And there's not a lot of hope for any rallies in most of these to be able to hold up very well. Question is, will Nordstrom get taken out? They're shopping for a buyer. I don't know. They'd rather be private. So it's possible. The next thing we're going to look at is Pandora P. This was a big week for Pandora, and the stock didn't act like it was that big of a week. In fact, Friday was some pretty interesting news as they moved to improve their balance sheet, where they sold Ticketfly for a couple $100 million, and they got an injection from Sirius, $400 million, so they have a pretty good influx of cash coming in. And here you could see the stock continues to the downside. Our projection is into mid-July before this move is over with, potentially about 3 weeks or so on the downside. Another stock in the tech category that we believe is bottoming, and we have a long setup on and looking for it to recover, is Twitter. Now, Twitter has moved down with the text today pretty badly. Tags this 13-week moving average. It was in this wedge pattern in here, and now it breaks below it. But now it's getting less likely that it's going to have any kind of a real upside move in here because of the way this pattern is setting up. We're going to expect a rebound coming in here in Twitter, as it's down about 7% on the week. But then when that rebound comes, we think it'll kind of fool around. You can see our pattern in here as it's drawn. It matches this right in here. So we're lowering our upside objective in Twitter, as that one looks like it's going to run into some selling again once it tries to pick its head up. T-Mobile is another one. Now, I told you that in the worst of the week, there were going to be some stocks in here that I thought were going to set up for some good trades. And T-Mobile, Marriott, and Starbucks are patterns that have now given pretty good warnings of top. So I want you to see that, because when we get a rebound in here, and you know it's going to try, these are stocks that I think are very shortable. And we'll take a look at this big rally in T-Mobile and what looks like an important top right there. So here is T-Mobile, and you can see that movement right over here as it has this engulfing pattern. It looks like it's going to decline into late July based on that pattern. So our downside target would be to this cycle low right over here or worse. So if if you get a rally here in T-Mobile with that engulfing, it's going to be worse. They have warned here this week that their prepaid sales have really fallen off. Their prepaid subs, so that's significant for them. Take a look at Marriott in here, and you can see in here another major engulfing. This has been a big mover on the upside. This goes to end of July before this corrective period is over with. This was just a modest correction right in here. So you see that low where it came right there. You see the low here, and this a little bit off. So this looks to us like towards the end of July that it's likely to decline. And we think that if you get an opportunity in an uptick to sell Marriott, we think it's a sell right now. And SBUX is the last one we're going to look at in this category. And there is another engulfing pattern. And this one we think is going to come down also towards the end of July. Remember, our stock market correction, we believe, is going to be end of July till sometime in mid-August. So this aligns with it pretty well. Right now, our target would be first target down to about close to $60. But we think it's going to be lower than that even because that's a pretty bad pattern. Take a look at the daily pattern right in here. This is interesting because our subscribers get our information on our option bias rankings, and that tells you when something is extreme overbought or oversold so that you can, well, put a bias in your option position in one direction or the other. And you can see in here that orange arrow shows you the date of that super overbought. and look what it's done ever since then. It comes into the support zone. We're looking for a couple more days in here on the downside, probably get a bounce, and that bounce we think is a major short in Starbucks and likely to see it move sharply to the downside again. So that is a look at Starbucks and 3 stocks that we think are looking like there is some significant selling yet to come in it. So that's a look at the worst stocks for the week. So coming up is our short-term view for the coming week. We always do this every single week. We're going to do it a little differently this week as we want to mix it up. And you're going to see that instead of doing our short-term view, which we do a little piece of what we do for our members on the stock market, this week we're going to do it on the metals market. You're going to see our much more advanced view of the short-term view of gold, silver, platinum, and copper. I think you're going to find it very interesting. If you're missing the short-term view of the stock market, do become a level 2 or 3 member. Level 3 members, we have a special this week. You'll be able to get all of our rankings and trade setups on the 80 best traded symbols that there are, stocks, ETFs, and futures. And you will also then get our whole video library, 9 different categories of videos, including the short-term view of the stock market, which you're probably missing right now. And then you can get that special for half price. Look at everything for a month, $43. Write to Slim at askSlim.com. And I will then send you a special link, and you'll be able to sign up for level 3 and get all of that fantastic information. Level 4 is our charts that you're looking at, which we send out to subscribers, and then they get everything else too. So just want to let you know about what all our members are. So send me that email, and then I will be able to send you that special to level 3 and all of our videos and rankings and trade setups. Here comes this week's special short-term view. So here is our analysis of the metals market, our short-term view. Remember, we're looking at the daily charts. We're also looking at the momentum on the daily and the momentum on the intraday pattern. So doing comparisons, of course, against gold and silver and platinum and copper. What had happened, basically we've been saying that gold was the strongest, silver the next, platinum the weakest of those 3. Copper, we were unsure about it, and it really came to life this week. So interesting patterns when we look at the short-term view for these metals markets. This is the short-term chart on the gold market. Now, what we expected in the last week was that we said, well, it could get up to like 1297. Let's just look at these last 1.5 big cycles right in here. And then we thought if it broke down towards the 1260, 1297 was where we thought it would peak, and we thought it would have a downward movement. And if it broke down to 1260, that it would then be entering our buy area. Here's that 1260 level right here. We almost tagged the high on that right there as it ran into that cycle peak resistance. Now, our pattern was suggestive of a correction, and you know, we got that. We thought it would be, you know, a little choppier than it was, but we made a comment that that gold was still going to maintain an upward bias, and here you could see it's got the strong upward bias in there, and that's why we think that it's going to bottom soon and then turn up. Now, silver, we said that it was likely to be weaker, and we thought that the downside projection was at around $17. You can see right over here it got down to $17.13, so we were pretty spot on right there. In the silver market, we think it's got another couple days and then an upward turn. So we're going to look for 1 to 3 days on the downside in there. In silver, the same thing that we see here here in the gold market /GC, looking for, you know, maybe 2 to 4 days in here is the way that lines up. We get that from these cycle patterns right in here. This is the silver, and you could see it bottoms about a day earlier than the gold one does right in here, and then they turn up. So that's really what I'm looking at. Note we have this marked for our subscribers that it is a buy zone right there. So likely that there's a good long side opportunity coming in the gold market. Here's gold momentum. You could see, here's what I really like: when you have positive momentum in here and you get the projection oscillator oversold, that brings usually more rallies. You can see a similar spot right over here, projection oscillator oversold, and it just simply continued on the upside. You can see this way back over here in February, projection oscillator oversold, and then to the upside again. So this is a bullish internals when we see this, and you got to like that. Take a look at silver /CL, and you could see that right there. I don't want CL /SI. That's a little peek at the negative light crude, and you can see in here projection oscillator oversold, still have positive momentum in there, even though it's a little bit weaker than we expected, or a little bit weaker than gold, but as we expected. Here's a little peek at the platinum in here, and you can see platinum is getting under the slim ribbon. So again, platinum is the weakest. And take a look at copper /HG, and you can see in here copper exploding in here as all this talk about infrastructure again has got copper picking up, as well as we're seeing that in the steel stocks and such. So copper, a much better look. You could see in here that it exploded here past this resistance level right there. Now we're looking for copper to pull back also for a few days in here. We think that this is kind of an anomaly that broke up through that moving average. You can see that it did the same thing right over here and then got into further correction, but this only has about a week to correct after that. So we're looking for it to roll over here and then move up again, and that could establish a better intermediate pattern than we have seen in here. So you can see a pretty improved chart when you look at that in copper. Here's the intraday patterns in here, and you can see that for the intraday patterns, as we get into this correction, the gold has lost its upward momentum. It's going to have to reestablish that, as platinum and silver has done. On the real short term, that little tip-off came a couple days ago on those slim ribbon signals right there that the upside momentum had been lost. Look at what copper did right over here, and you can't see the arrow there because it's blended into the green, but positive momentum established right there. So copper much better than it was, and that is a good look at the metals. Of course, that's our short-term view of the metals, and our longer-term view is what we do on Futures Speak every single Wednesday, and then you'll be able to see the weekly cyclical patterns on there and how they all kind of fit together. So that's a look at the metals. So here is our analysis of the metals. All right, we're back. Got a little messed up there, but this is the end of the show. If you want to see our short-term view for the stock market and also the treasury market, the currency market, we do 5 markets every single week, and I think that you will enjoy looking at all of that. So send me that email, slim@askSlim.com, and you will then be able to see all of our deep analysis on the short-term view just by becoming a trial level 3 member. That's it for the week. I want you to be safe because it's really crazy out there. We're always wishing you great trading.